Now, please, guys, stick around because we've got a big panel coming up, and it's going to be called T0 Settlement, the End of T2, and it's moderated by Cointelegraph's very own Ciaran Lyons. Everybody put their hands together and give them a big round of applause. Thank you.
Hello, everyone. This is a very relevant topic. I'm sure everyone has had banking delays, banking friction at some point in their life. So I'm very interested to get on and tackle into this topic. What we're going to do, we're going to get straight into it. I love each panelist to just introduce themselves and maybe give us something that you're really excited about this T0 settlement opportunity that we've got. We'll start with Alexis.
Yeah, I'm Alexis, business director at Gravity team. We are a crypto market maker and OTC desk operating today on 50 different venues globally and trading like 15 different fiat currencies with a strong focus on emerging markets.
Hi everyone, I'm Karima Lachgar. I'm the CEO of Olkypay Wallet, which is the crypto subsidiary of a neobank group that basically provide an all-in-one platform that embark KYC as a servicing, processing of fiat and crypto flows, and lastly, a tokenization solution for non-listed securities or any real-world asset.
Hello everyone, Moritz Platt. I'm a capital markets technology manager for Google Cloud. A lot of people ask me today what's Google doing at an event like that, because it's probably not as obvious as some of the other companies. Traditionally, we've been selling infrastructure to Web3 companies, and we've recently also launched a Layer 1 DLT, Google Cloud Universal Ledger.
Hi everyone, I'm Jennifer Shaughnessy and I'm the Chief Revenue Officer of CoinRoutes. What we do is we aggregate the exchanges and then we have algorithms that help institutional traders to trade better. And we also offer risk management, portfolio management, and what we are most interested in is just capital efficiency. So this should be a really good talk.
Thank you very much, guys. And look, I'd be keen to kick it off with looking ahead, a bit of speculation. If we fast forward 5 years and T0 settlement is the global standard, what does that market look like? We'll start with you, Jennifer.
I think we're already here for crypto. I think that T+0 is the standard right now for our traders, and that's what they expect. But I think it's more about merging the traditional infrastructure. And I mean, we see that with our traders. They'll trade on Hyperliquid and they trade on the CME. And they're not just trading on Hyperliquid because they find it to be interesting. They're trading on Hyperliquid because they get capital velocity. They have less friction. So yeah, I think the future's here.
And what about yourself, Alexis?
Yeah, we have a different view. I mean, of course, yeah, T0 is already here for the major currencies. I agree. But it's much more complicated with like more emerging markets. And I think, the big shift, if we had like instant settlement in all these markets globally, would be like this settlement risk will almost disappear. And the cost tied up on capital would also fall. Like the liquidity will become genuinely real time. And because today on T+2 settlements, you have basically a hidden fee on every trade. And because of the capital, collateral, and margins who are like stuck in the pipes for 1-2 days, when you have to rebalance all your portfolio between all these jurisdictions. And whereas in the T0 world, you could basically use your funds multiple times in the same day and move collateral. which will ultimately decrease the cost of capital for traders and market makers like us. So, yeah, today as I said, it already works well with the G7 currencies, but we are working actively to make it happen with the emerging markets, and I think we would need more local stablecoins issuers working closely with local regulators and local tier 1 banks to make it happen. And after we could have some FX platforms, some big players are already working on it. I'm not gonna name them, but we are also closely working with them and happy to support this because this will change the way we execute our business.
Yeah, and I know everyone in this room would agree that T0 settlement is a good option, probably everyone at this conference. But are we also estimating how much TradFi depends on settlement delays as a feature and not a disadvantage? Jennifer?
I think it requires more preemptive compliance checks. And I know we're going to talk about float. I'm going to say that, yes, certain institutions can experience an advantage from the delay, but I think that the advantage of T+0 is going to far outweigh it, and I think we can get into that further.
Yeah, I mean, does the T0 concept kill the idea of float altogether?
Yeah, it does. I think so.
And then who are the biggest winners from that?
The end user. I think our traders. I think when you have capital efficiency, the trader gets to take advantage of, let's just say you have an arbitrage opportunity. We have that all the time with our clients, and they have $1 million to trade. If they have to wait 2 days, then they can only, trade $1 million. If they have continuous, constant settlement, then they can do that 100 times in a day, and trading volume has increased by quite a bit. So you really increase capital efficiency.
I guess we'll go to Karima now. I know legal background yourself. What, I guess, regulatory blockers are in the way of full adoption of T0 settlement right now?
I like this tricky question because, to be honest, I don't think that the main blockers come from the regulations or even the regulatory positioning. At least in Europe, maybe remember back to October 2023, ESMA had asked to European stakeholders if they were ready to move to T+1, even T+0, because ESMA and European Commission were aware that US, India, Canada were moving to T+0, and they were afraid of the negative impact on the European capital markets. But actually, it's the private sector which had expressed the most reluctance for two main reasons. The first one is obvious. The European capital markets are highly fragmented, multitude of CSDs, CCPs, MTF, multitude of currencies. And the second reluctance, which is really important to my viewpoint, is the fact that a part of the European capital market value chain had grown based on a business model addressing the friction amongst existing jurisdictions. And clearly, this business model, lowered the incentive for investing massively on a single, DLT layer, single solution that actually removes all the barriers. So any reduction of the settlement cycle, T+1, T+0 in Europe, it will, at the end of the day, trigger the same statement. Quite simple. It requires more to consider it, more to change, more to coordinate amongst the large European players, and probably more to invest. So coming back to the question that what needs to be collectively addressed and cleared, I think there are three main issues. The first one is, should we move in Europe, move to T+0 on a big bang approach or gradually? For instance, in doing it in intraday settlement batches, or even end of the day plus zero, instead of real-time settlement. Second question is, should we do it within a single DLT layer, or focus ourselves in working on connectivity and interoperability? And last but not least, the pre-funding issue, which is the real prerequisite to any reduction of settlement cycles. And for that, we need to rely on EU-wide collateral management solutions that are efficient, robust, resilient, and backed by central banks. So I would say the question for me is more, are we collectively ready, at least in Europe, to take the responsibility to disalign with other geographical zone, or should we seek to bring ourselves on a comparable timeline?
I guess, can you elaborate a bit further then on the operational challenges that firms might have moving to T0?
Yeah, as I said, pre-funding issues, so it triggers the management of the liquidity. I would say the settlement discipline, of course, settlement discipline is highly regulatory issue, but we need to align all the value chain. Are the actual financial market infrastructure, like CSD, mainly in CSD, ready to move and to tokenize their core services or not? So all these challenges, it requires not only time, but coordination. It should be coordinated if we want to do it on an efficient way.
Go back to Jennifer. So Jennifer, what jurisdictions do you think are going to adopt T0 quickest, and which ones maybe will be lagging?
I think Asia is going to adopt T0 quickest, and we're seeing that a lot in the crypto space. Actually, well, we're quite bullish on Asia at CoinRoutes. Our CEO is in Hong Kong right now. That's why you have me on this panel instead of him. But yeah, I think the Western world has benefited most by traditional infrastructure, so I think Asia is going and is adapting first.
Yeah.
We'll go to Moritz now as well. Can you give your insight from Google, working at Google, what your thoughts are on the move to T0 settlement in the coming years?
Yeah, absolutely. I mean, I guess the first realization is that really it's not purely a technological problem, and I think you hinted on that in the previous questions. Regulation is coming around now, but there is also still very much the notion that there are some actors in the market that benefit from the inefficiencies, and they will not be happy with the fact that we are actually moving to a T0 world, because that will sort of threaten their business model. And this, I guess, is where we come in with a slightly different view, not with the view of disintermediating those participants, but really with the view of reallocating some of their activities and their initiatives into something that is creating more value. So instead of taking traditional financial intermediaries, banks out of business, really give them a different seat at the table where they can contribute more and generate more value in this new T+0 world. And part of this is an underlying DLT infrastructure that is regulatory compliant.
I guess, Alexis, I'd be keen to hear from you on bugs and exploits. I mean, if settlement's already final and irreversible, how do we deal with that?
Just before to move with this question, I want to add from what Jennifer said about what emerging markets versus traditional ones is. To me, Asia, it's really a case by case, because I can see in Asia, some countries like Indonesia or Philippines are moving quite fast, but some others like Thailand have a huge capital control, and I think they will lag in this way to adopt T0. And in LATAM, it's a bit the same. Brazil is moving forward with that, so it's really a case by case. And Sorry, what's your question?
It's fine. There was a guy fast asleep in the front, and it was putting me off a little bit. So, the bugs and exploits when settlement is final and irreversible. How do we deal with that with T0 when there's no delays?
I mean, at least without OTC Desk, and that's a big challenge, is we run some checks in real time on wallets, on counterparties. So, and we try to slow down as much as we can when we flag anything suspect. And block, even if the rails are instant, I mean, quite instant, we usually keep some time to proceed with all these checks. And I think that's also the big challenge to make everything, to settle as fast as possible, is probably to add some AI agents to recognize patterns. And that's our main focus, I think, for this year and next year, to really add these agents working 24/7 for us, especially as we operate globally.
And Moritz, do you feel that if settlement does become instant, that by default we are going to be heading towards a world where we have 24/7 markets?
Yeah, I mean, certainly. And I guess this ties into the earlier question as well. So I guess the question is, how do you integrate those control functions, risk management, and so on? And for me, the answer is very similar to what you laid out, right? We basically need to front load that. We need to integrate KYC, AML, risk checks into smart contract logic so that ideally we can actually stop these issues from occurring before they even hit the ledger and can programmatically make sure that it doesn't happen. To add to that, I also agree with what you said around applying AI to software quality. I think this is sort of the next step. Once we agree to the fact that smart contracts will be key in enforcing that markets can work instantaneously 24/7, we'll need to make sure that the software quality allows for it as well. And in my opinion, AI is a big contributor to that, making sure that the software quality is where we need it to be for 24/7 markets.
Absolutely. And Jennifer, can you add to that as well? Are we heading towards that 24/7 market by default?
Yeah, I think to add to that, when you have AI agents, you don't have the same constraints as humans trading. So I think that market demand is just going to push it to 24-hour markets. I mean, for us, I think we just see such a difference in capital efficiency when you have a 24-hour market. You can, capital velocity is much higher. I think that settlement is a piece of that, but it all kind of ties into capital efficiency. And then 24-hour markets, I think, are the expectation in crypto. And we're okay to bridge, like we offer the CME on, our exchanges, on CoinRoutes as well. So I think it's more just about converging those worlds, and we're going to move into 24-hour trading, absolutely, across, all markets and not just crypto.
And Karima, what's your thoughts on that as well with 24/7 settlement markets,
Yeah, maybe I will add something on the compliance check because, of course, that's the main condition for reaching this efficiency. Based on our track record, because we developed actually tokenization solution and we have developed atomic swap. The way we did it to make it feasible, so we proposed to our clients to decide the moment where the compliance check is going to be done, but one single time for all the ecosystem. You can do it at the moment if we talk about securities, whitelisting securities, done by the issuer when, taking back of the token management solution, it state the type of investor it like to have. You can do your checks at this moment, but you can as well decide to do it at the moment of the pre-funding time before the atomic swap occurring between the buyer and the seller. So in both cases, we decide to develop a kind of KYC passport that can be transferred from a player to another one to avoid the multiplication of checks. And I think it's interesting to explore this to make sure that T+2 will trigger all outcomes.
I guess, we've talked about pain points and compliance and why there is lags, but at the end of the day, objectively, if T0 is better, why hasn't the market forced it yet? We'll start with yourself, Jennifer.
I think these things take time. I think crypto has always just kind of taken this approach to build first and let regulation catch up and adapt. And yeah, to me, I think it's just going to take some time.
And Moritz?
Yeah, +1 on that, right? I guess now we have more regulatory clarity around it. We have more of a push for it from a business and use case perspective as well. But we should not underestimate the complexities of integrating with these systems, building new systems that support T+0, making sure that they all work in a regulatorily compliant fashion, which is something that will take time. But we see in events like this that there is a big initiative and push for it. And a lot of the concepts that worked out really well in the decentralized Web3 space can be brought to traditional financial markets as well. Maybe not in the purely decentralized permissionless form as it is today. Maybe we need a bit of a halfway house where we look into permission systems initially, but integrating with systems is one of the biggest blockers today because it can be quite complex, especially if you're looking at traditional blockchain infrastructures where maybe you need to run your own nodes, you need to account for all different types of failure modes where it's not as easy as integrating with just an API or a software as a service.
And Alexis, when we have market stress during instant settlement, does it amplify cascades as well?
I would say, it will accelerate the price movement, probably, but not necessarily make it worse. Because, obviously, if players are over-leveraged and there's poor risk controls, yeah, it will probably accelerate the liquidation and create a chain reaction. And we have seen, unfortunately, this before. But I also think it could stabilize the prices. Because as we mentioned before, with T0 settlements, the counterparty and settlement risk decrease, I'm not saying it disappear. So it will bring more confidence for the traders and avoid some panic. And also what we have seen, at least again on this major currency where we have already T0 settlement, is large players will much rather, in these cases, go to our OTC desk to execute large orders instead of smashing the thin order books on exchanges. So that calms things down. And also, as a market maker, it will free up our capital much faster. And we could rebalance in other venues to keep the price stable and create a two-sided market. So yeah, I think if the collateral and risk management is solid, it will actually make the markets more robust and don't speed up any collapse. Yeah.
And how about yourself, Jennifer? What's your thoughts on with market stress and instant settlement?
We see this a lot. This is why we had to build our infrastructure to be so robust, because in times of high volatility, that's where the most money can be made. So you have to have uptime. So yeah, I think risk checks, controls, and just very robust infrastructure that can operate in such a fast market.
We're going to go back to regulations as well, because it's such a prominent topic, not just within this, but I feel like at the whole conference as well. So we've got Karima as well, who's explicitly said as well at the start of this panel that she loves anything regulatory, and a few others were saying don't. So that's
Glad
great.
she does.
Yeah, I'm glad we've got Karima here, because any regulation question is going straight to you. But I guess, do you think, Karima, that regulated players will ever trust public settlement networks?
Yeah, it's interesting because I think it's not only on the hand of regulated players, that of course are supervised by competent authorities, but as well on the hand of public institutions and mainly central bank, and in Europe, Eurosystem. Maybe you are aware that the Eurosystem and European Central Bank has launched last month a program called APIA, which is a roadmap that aims at delivering a blueprint for 2028. And the key point of this program is to address the question whether or not the European Union is going to rely on a single DLT network, or will choose to focus on connectivity, interoperability. And there are, I remember, 6 work streams addressing, monetary policy, systemic risk, etc., etc. So what is on between the line is the fact that politically, the position of the Eurosystem is to say, at the end of the day, whatever the solution, open source developed or privately developed, we want it robust, efficient, and we want to operate it either by central bank, governance, or shared party governance. So what it means shared party governance is it's only at the level of central banks or in some direct participants. If we talk about the listed word or not, we will see. But yeah, I think we will have this beginning of this answer to your question maybe mid-end of 2027. I don't know what you think, Moritz, if you heard about this.
Yeah, I mean, I guess what I can say from an industry perspective and talking to a lot of people is that right now, public permissionless is not something that is on the menu of anyone who is a big commercial bank or an FMI. I think there are a lot of technological open questions really that have to be solved. Around control, around gas fees, around risks of networks being shut off as well, that can be addressed over time. But what's really needed is a push towards that network from a business perspective and from the perspective of the banks as well, because the default posture today, as you described rightly, is really to go most likely private permission, maybe public permission, but really opening up to a permissionless network is not on anyone's bingo card right now.
And Moritz, I'm going to go back to you as well, because I feel like sometimes, we crunch these topics and we get into the nitty gritty of it, but when we talk real, how realistic is this concept right now, T0? We see this with other great technologies and there's always lags in it as well. So how realistic is it that T0, you brought up a year before, Karima, but a prediction. How realistic is it that this does eventuate before 2030?
I think it is a big challenge to get there, and we can get there before that if there is real business incentive to do it, right? It will not be a technological push. It will not be a blockchain vendor or tech provider putting out a solution and hoping it will be adopted. It needs to really be a pull from the market where there is real requirement for these systems, and that requires us to rethink some of the business models that are out there as well. But if that's happening, then it can go much faster than that. But things in tech always move more quickly if the business is behind it and there is money behind it. So this is what it will come down to.
Absolutely. And how about yourself, Jennifer?
I think we're working right now with institutions and professional traders that are very sophisticated. And I think that that's where the demand is coming from, as Moritz said. So I think the demand will be what pushes it. But on the trading side, I'm seeing that demand, and I'm also just seeing how much better of an experience it is for traders. So yeah, I think it's coming soon.
And Karima?
Yeah, can you repeat the question? Sorry.
How realistic is this actual concept from coming to fruition? Because we are talking about it now, but by 2030, how realistic is it that we actually see T0 settlement come as mass adoption?
I'm not sure I have a clear picture on that. I would say that, as Moritz said, it depends of the push of the market. But actually, again, for Europe, it's a mix between the position of traditional incumbents, like mainly CSDs, and the fact that, of course, the traditional banks and the central banks are really reluctant to see global players, especially if we take account the problematic of sovereignty, and sovereignty not only of the infrastructure, sovereignty of the monetary policy. So everything is mixed. So I would say it depends as well the level of development of CBDC, the digital euro, or significant euro stable coins. So everything is, merging and cross. So that's why I think it's difficult to give a picture for this timeline. But yeah, there are parallel mainstream. There is the layer mainstream. There is the cash on chain work stream. And yeah, we need to merge everything.
And how about you, Alexi?
Yeah, it depends on how you look at it, but of course, with our global view on it, I believe so. I mean, all our partners are pushing for it. Like the two most important things is the settlement speed and the pricing, of course. And so the question by 2030. If you talk again about US, Europe, and some major countries, absolutely. It would be more a matter of hours and more than T0 or T2. But if you talk about this high control with travel rules countries in the world, and you are talking about T0 settlement globally, that's going to be a much bigger challenge. And again, I can see that all these countries are pushing for local stablecoins, which could resolve these issues, and especially with some of these kind of FX platforms where you could change all these stablecoins with each others. But I think we are going there, and at least Gravity, we are really pushing for that. Yeah.
Awesome. Look, we're almost out of time, so I guess to wrap up the panel, I'd like to hear from each one of you what you're most looking forward to about T0 settlement. We'll start with Jennifer.
That's a good question. What I am most looking forward to, honestly, I think it's already here just because I am working more in the digital asset space, so I see T0 settlement and I see how much it's increased capital efficiency. It reduces the need for as much lending. So I see it as something that's already here. I'm looking forward to mass adoption. As far as a business go, I'm not holding my breath for mass adoption. We're still offering a bridge for traditional finance to trade. So for us, it's more about giving people the option. You want to be able to trade anything, anywhere. That's the goal. And I think of it as more of a convergence. It's not necessarily an evolution and it has to take over. I just think T+0 settlement exists today. It's doing well. It's alive and well in crypto.
And Moritz?
Yeah, I'm a technologist, so I'm looking forward to the technology aspects of it, and there are a lot of really interesting and challenging engineering problems in that I think we can solve and are being solved. A lot of them also related to the foundations of Web3 and cryptocurrency. So things like programmability are going to be really essential in achieving what we need to do to get to T0. So it's really interesting for these technologies to be put to the test in a very demanding environment. So I think for everyone working in Web3 technology, it's a really great time right now.
Awesome. And how about you, Karima?
Yeah, I totally agree with what Jennifer said. I think, yeah, it's already proven that T+0 can deliver very efficient trading, and we can benefit all from that. So maybe I will be a bit provocative, but I'm waiting a bit more competitive pressure from the USA, Asia, to be sure that in Europe we will be able to finally delete this spaghetti model that we fight since 2 decades now. And I think, yeah, we should just focus on technological part, selecting maybe not one, but maybe 2, 3 major proven robust technological solution, and let the rest of the market doing it. Yeah, there is place for anyone.
And finally, Alexis.
Yeah, I'm obviously super excited. We would make our capital, we talk about capital velocity. We could turn our inventory, same balance sheets all over, add new venues, quote tighter. So ultimately, the user experience will be improved. So yeah, it's very exciting time. And again, I think with AI tools, AI agents, it will make it even more possible, much easier to implement on the operational side, on the compliance side, and so on. So yeah.
Awesome. Well, thank you, Alexi, and thank you to all our panelists as well. What a great discussion. Ladies and gentlemen, please join me in thanking our panelists one more time.
Welcome to Signal Week.